Welcome back to Crypto Philly, the no fluff podcast where crypto meets clarity. I'm your host, Sean, from CoinFlask, a tax strategist, on-chain sleuth, and the guy who reads IRS guidelines so you don't have to. Today's topic, how to handle crypto transactions on tax returns. Hey, it's not sexy, but it's critical, especially if you want to stay off the IRS radar and keep your gains in your wallet. So let's get into it. First things first, the IRS considers crypto as property, not currency. That means every time you sell, swap, spend, or even sometimes receive crypto, it could trigger a taxable event. And if you think the IRS isn't watching, they are. They've sent out letters, subpoenas, and even partnered with blockchain analytics firms to track wallet activity. So whether you're flipping some JPEGs, yield farming on DeFi, or just hodling, if you touched crypto last year, you probably owe something, or at least need to report it. Let's clear up what does and doesn't count as a taxable event. Here's what does trigger taxes: selling crypto for fiat, like turning ETH into USD. Swapping one crypto for another, like trading Solana for AVAX. Using crypto to buy goods or services? Yeah, that counts too. Receiving airdrops, staking rewards, or mining income? These are taxed as income, not capital gains. Now, here's what doesn't trigger taxes. Buying crypto with cash. No tax until you sell. Transferring crypto between your own wallets? No tax here either. Holding crypto? Unrealized gains are not taxable yet. So, what kind of taxes are we talking about? Well, there's two main ones. The first, capital gains tax. The second, income tax. Capital gains tax, it's if you held your crypto for more than a year, congrats, that's a long-term capital gain. And rates are lower. Less than a year, that's short-term and taxed like ordinary income. For income tax, things like staking rewards, mining, airdrops, and crypto salaries are taxed as income the moment you receive them, based on the fair market value of that specific currency in USD. Now here's a tip. If you reinvest your staking rewards back into DeFi protocol, that's a second taxable event. Here's where most people mess things up. Tracking, record keeping. Okay? If you're just trading on Coinbase or Gemini, they may issue a 1099, but it won't show the full picture, especially if you're using multiple wallets, decentralized exchanges, or DeFi protocols. What do you need? First, dates of each transaction. Second, the USD value at the time of the transaction. That's meaning fair market value. Then the cost basis. What did you pay for it? And finally, gain or loss. When you sold it, did you sell it for more than what you bought it for? Or did you sell it for less than what you bought it for? And if you're doing this manually, it can be painful. That's why tools like CoinTracker or Coinly, and I'll post those links in the blog below, to these tax tools. What they do is they plug into your wallets and exchanges to give you a clean tax report. And yes, affiliate links in the show notes if you want a discount. Support your favorite crypto tax nerd. So how do you actually file? So on your IRS 1040, assuming you're doing this as an individual, there's now a yes or no question where it asks, did you receive, sell, exchange, or otherwise dispose of digital assets? If you answer yes, you'll need to file the following schedules. First, Schedule D for your capital gains, Form 8949 for detailed trades, and possibly Schedule 1 for income like airdrops and rewards. Now, some tax software now includes crypto-specific options, or with a tax pro who actually understands blockchain, like myself. Wink, wink. So let's start wrapping these things up because we know how entertaining tax can be. So, quick tips to wrap it up. First off, do not try to hide it. Blockchain is transparent. That's the whole purpose of blockchain. So the IRS will catch up. Use portfolio trackers, even if you're not filing yet. Those are the ones I mentioned above, CoinTracker and Coinly. If you didn't report last year, talk to a tax pro before they talk to you. And remember, the more complex your DeFi life gets, the more proactive you'll need to be with tax planning. So that's it for today's episode. If you found this helpful, please rate the show and share it with your Web3 friends. You'd be shocked how many people are winging it with taxes. And boy, do I have stories for you. Anyway, for more resources, affiliate tools, and crypto tax content, check out coinflask.net or cryptophilly.com. So until next time, keep your keys safe and your ledgers clean. Peace.